Good morning, ladies and gentlemen. Thank you for watching the Gold Silver News. My name is Christian Garcia. The price of gold and silver continue to plummet. There's been a lot of reasons offered as to why the prices are falling, anywhere from the CME raising their margins to the gold and silver longs selling their proceeds to cover their losses that they felt so far on the stock market. Whatever the reason, at the end of the day, it doesn't matter. The price of gold and silver is supposed to reflect supply and demand. There's no way demand all of a sudden fell by 30% across the board and therefore we should somehow stop mining. It doesn't work that way. If you go to silverinstitute.org, you'll clearly see that since 2001, every ounce of silver that has been mined has been used. Supply and demand are in balance. Everything that's been mined has been used. But not only that, the government has had to step in for the last 9 years to go ahead and fill the gap from the demand and the supply. So clearly, there's not an issue with supply and demand. Demand is still there. Whatever the reason for the price drop, look at it as a gift. Right now, it's time to go in and build to your position. QE worldwide is in effect. Over the weekend, the big news was the G20 agreeing or coming up with plans for a 2 trillion euro bailout plan to go ahead and contain the eventual default of Greece. Yes, there's plans being drawn up to go ahead and handle an orderly default of Greece, which is about time. Not sure of the time frame. My guess is sometime by Halloween that should happen. But they're also doing this to go ahead, quote unquote, contain the sovereign debt crisis, and they want to limit it to Greece. Well, this sounds a lot like what Ben Bernanke said a few years ago in regards to subprime, coming out with a bailout to contain the subprime mortgage meltdown, and he claimed that at that point back in '07 that it would not affect the economy. Well, we know how that turned out, right? 4 years later, we're still suffering, and this bailout, this 2 trillion euro plan is not going to help Greece. It's not going to help out the world economy. And of course, this leads to the fundamentals. We still need to stick to the fundamentals. If you look back in the '70s bull market, gold and silver suffered a drop similar to this. From February 1974, gold rose all the way from 725.81 and silver rose to 27.31. But by 2 years later, it had fallen. On January 1976, gold fell to 534.78 and silver fell all the way down to 1634. That was a 26% fall of gold and a 40% drop in silver. In today's terms, silver reached the high of 48. If you subtract 40% of that, that should knock it down to 28.80. Gold from its high of 1901, if you drop it down 26%, drops it down to 1406.78. So those are potential numbers if we were to go ahead and replay the performance of the 1970s bull market. So drops and price swings like this happen all the time, but in the '70s bull market, after the price fell severely as it did in this era in the '70s, gold and silver skyrocketed soon afterwards. After January 1976, it didn't look back until 1980 highs. Now, here at goldsilver.com, we're about measuring your value and your wealth in ounces in gold and silver. Keep in mind, as a little consolation to what's going on, we measure our wealth in ounces and gold and silver. Mike likes to say that we watch the Dow Gold ratio. If you notice, from the January 3rd, when the stock market opened, and to the price of gold when it opened, to where we're at right now, in January 3rd, 2011, we started at 8.5 ounces, meaning it was taking 8.5 ounces of gold to buy 1 share of the Dow. Right now, as of Friday's close date numbers, it was taking 6.5 ounces. So even with all the pummeling gold has been taken in the last few couple of weeks, the truth is gold has held its value and it's still more valuable than it is in the beginning of the year. We're expected to go to a 1-to-1 ratio on the Dow Gold, and we started the year at 8.5. Right now we're still at 6.6. So that means the dollar has crashed still from year to date 35%, and we're still that far ahead when we value our wealth in gold. So please do not look at what's happened recently as as a bad sign or the end of this bull market. No, this is the last hoorah for the dollar. After this, I don't believe we're going to see these prices ever again. So again, I'll go ahead and put the numbers down in the synopsis underneath the screen. Feel free to contact me with any questions. I do apologize for not getting back to some of your questions of the weekend, but please limit the comments to some good questions. Again, I feel that based on the past production of gold and silver in the last 1970s bull market, even if gold were to go down to 1406 and mimic what happened in the 70s and go down 26% overall, that means that if you divide that down gold ratio 1406 into the Dow's Friday's price, we still get a 7.6 ratio, which means we would still be better off than where we started the year. So, if you go to Mike's book, Guide to Investing Gold and Silver, on page 57, he talks about what is the value. People get focused on the price, well, we need to look at the value. And year to date, the value in gold and silver, the bull market's still alive. So like Mike says, stay focused, keep the course, and continue accumulating. All right. Thank you. Go ahead and let us know you like us by liking it on the screen. Thank you for watching. Bye.